Hello guys, so the UPSC 2025 economics questions have come very easy actually because the questions are from concept. But in the exam pressure, maybe you couldn't solve few of them, but I'll show you each question, its explanation, like the concepts, how it's taken and how it is differently asked this time. Okay, so we have already discussed the history and polity. You can see the complete mapping here. We have done the history questions, 17 questions, out of which 12 to 13 were there from our test series. Then we did a polity, in which the second section 14 questions, which again 13 questions were from our test series. Now we are doing economics. So here I have written 12, but we will be doing 13 questions because one of the question which was in current affair, that also I have included here because it's about the UPI. Okay, so total 13 questions are there. In that also 10 of them are there in our test, and it is solvable for any of you who have studied the concept of economics. So economics, when we see the easiest question, the first question which I am discussing is the International Bank of Reconstruction and Development, that is the IBRD. So this, even without our test, our revision charts are there in plenty. We know there are multiple banks. Okay, here because elimination works, I am telling it's the easiest question. Okay, here if you see the second question, it works single-handedly to help developing countries to reduce poverty. So that itself, if you don't know anything, anyone who simply reads it knows that there are hundreds of banks like Asian Development Bank, Asia Pacific Bank is there, the Infrastructure Bank is there, New Development Bank is there, and within the World Bank itself we have this IBRD, IDA, all these International Finance Corporation. All their jobs is to help the countries and the corporations who needs money. Okay, so the functions also detailing we have done. Even the European Bank of Reconstruction and Development is there. So when that statement itself is wrong, you can simply eliminate 2 in every place, and you will come to the answer as C, that is 1 and 3. Okay, and statement 1 is it provides loans and guarantees to middle income countries, and it was established to help Europe rebuild after World War II. So these are basics. The Bretton Woods Conference and the World Bank, IMF, all these formation is like basics, and it should be known to everyone. Okay, so this is the first question, which can be solved just from our revision charts alone. Now concept starts. Okay, capital receipt create a liability or cause a reduction in the assets of the government. Then borrowings and disinvestment are capital receipt. Then interest received on loans create a liability. This also through elimination also you can do if you don't know the concept, like interest received on loan, meaning you are getting interest from someone and then it is telling it's a liability. You are getting interest like it's an income, right? It's an income, and income cannot be a liability unless you are taking loan from someone. So this is not a loan. This is like something you have given out the loan and you're getting back the interest. So that's not a liability. So here, the third one, if you eliminate also, you will directly come to the answer, that is 1 and 2. Okay, answer A 1 and 2. Now the concept wise, if you see, they're asking basically about capital receipt. Okay, so capital receipt is something here again in a revision chart. If you see, this is expenditure, and below that, just let me. Okay, this one, decrease the asset or increase the liability. That is a description of it. That is either you are borrowing money from someone, so you are getting a capital, so it's a capital receipt, and you have to it has to be given back. That's why it's increasing liability. Okay, a loan. And then decreasing asset. Decreasing asset means, suppose there is a PSU, a public sector company, which like suppose Air India or something. India, the Indian government is selling it to private people, so your asset is going away. Decreasing the asset, and then you're getting the money. So that's a capital. So that is not any debt creating or nothing. You have given something and you got the money and it's over. So that is again coming under capital receipt. So that is again the second statement they have given. Meaning the first and second statement are nothing but the same. Okay. Borrowing is the one which is increasing the liability, and disinvestment is the one which is reducing the asset. So these two are both same statement in a different way with example and concept they have given. So statement 1 and 2 is correct. So this in our economics test 1, again, this test alone, if you have done at least 5-6 questions were solvable, because that is the test in which all our concepts have been discussed. So here, this is the definition also in the same test. In the, if you come down in my test PDF, that is where I have just shown the screenshot for my students to go and verify it. Okay, now this one is the first time UPSC is asking you to not only know the formula of something but apply the formula. Okay, usually in CSAT you do this, but here in the GS paper itself, they are asking you the capital, these 3 things. Okay, revenue deficit, fiscal deficit, and primary deficit. That is what you have to calculate. And this one is again directly in the same test. We have the concepts, everything we have discussed in detail, and we have videos also of this. So this one, if you take what is revenue deficit, when revenue you have a income and revenue you have an expense, when you minus the both, you will get the revenue deficit. So that much straightforward it is. They have given revenue expenditure is 80,000 crore, revenue receipt is 16,000 crore. So obviously the deficit is the subtraction of that. So that is 20,000 crore. So the statement 1 is correct. Then they are asking, what is the fiscal deficit? So fiscal deficit here, if you see, is nothing but our total revenue and capital together is the total expenditure minus the total expense. So that is something actually when you have something, you don't have revenue, but you are spending it. From where you will get it? You are obviously borrowing money. So that borrowing is literally equal to your fiscal deficit. That also in our test in red font, I have explained it properly. So here they have clearly given this. The government shows borrowing of 10,000 crore. So borrowing is 10,000 crore means that only is your fiscal deficit. So fiscal deficit is 10,000 crore. Now, when I'm explaining, it may look easy to you for new students and all, but this is like actually easy. Okay. If you remember the formula, or not formula, the concept, then what they're telling, the primary deficit. So primary deficit is again when you have the interest payments along with that. So primary deficit is equal to fiscal deficit minus the interest payment. That is the straightforward formula. So already you have the fiscal deficit given as 10,000 crore. They have given the interest payment as 6,000 crore. So subtract it, you will get 4,000 crore. So 1, 2, 3 all are correct. They did not try to complicate it by giving wrong answers or giving wrong formula, wrong mathematics, nothing. They give you straightforward just to test whether you are an aspirant who knows the concept of these three deficit. So in future you can expect questions like this which will be more complicated. They'll make the answer or the number wrong and then you will have to correct it. Okay, so please study this test number 1 at least. If you are enrolled with me, at least the test number 1 go and revise again, because at least one MCQ is equal to like 5-6 concept. So you can like 100 MCQs, like 500-600 concept you are going to study, and from that only questions round and round will come. Okay, so please try to study that. Second question, again the same way they have asked. A country's fiscal deficit stands at 50,000 crore. It is receiving 10,000 crore to non-debt creating capital receipt, and it has interest 1,500. And they're asking what? Again, the primary deficit. Just now I told you primary deficit is equal to the fiscal deficit minus interest payment. Fiscal deficit is given 50,000 crore. Interest payment is 1,500 crore. Simply subtract it, you will get 48,500 crore, the first one. The other 10,000 crore is given to confuse you. 10,000 crore is clearly written. It is a non-debt creating capital receipt. Okay, non-debt creating capital receipt is the other one which I told you now, the disinvestment kind of thing. So that doesn't come here in picture. So here they are just to confuse you, we have put that. So answer is just simply minus the borrowing, that is a fiscal deficit, minus the interest payment which they have given. So this is again a little bit next level of the question of the previous one. So the UPSC have given the hint that they are going to ask these type of questions and you have to be ready. It need not be on deficit, it can be on GDP, it can be on national product, anything it can be. So those concept, everything is clearly explained in test number 1. Please today itself go and revise it. If you have not enrolled, come and try to enroll. Economics alone also there is package available. Okay, now again, this question will look very complicated and big in nature, but it's the easiest question again. Okay, which are the following regarding the 15th Finance Commission? And you know 15th Finance Commission is already asked in 2023 prelims. This is a video clip from my 2023 Vysh versus UPSC video. Okay, so here if you see, they asked the parameters on which the income or the tax will be, devolution will be done from the center to the states and within the states. So that much deep they asked. This time they just asked you, if you see, this is looking tough. They are asking this much crore given, this much crore given. So that and all, nobody can by heart and go, or like budget and economic survey, you cannot by heart and go. Finance statement, you cannot by heart and go. But see the second statement, 45% of the net proceeds of the union is given to the states, meaning 100% what the government, central government gets, out of that 45% will be given to states. That is the basic which you have to know, because it's only 41% which is given by the 15th Finance Commission. And that again in detail in economics test number 4, Finance Commission report, there is a statement we told, the divisible pool has steadily increased, meaning from the 11th Finance Commission we have been giving, the center has been giving to the states in a increasing order. But if you see, it was 29%, 30%, 32%, 42%, and then it became 1% down. Because the Jammu and Kashmir now became part of the union and it is not a state, they reduced the share given to state and it became 41. That was the news that time. So now they again simply put it as 45% and asked you the same thing. Okay, so that alone if you eliminate, statement 2 alone if you eliminate, you cut this and you cut this, you get the answer as 1, 3 and 4. Meaning that factual information given in statement 1, some 4,800 crore is given, or the 45,000 crore is given, you don't have to by heart it. it is becoming automatically correct. And the fourth one, if you see this one, many students ask me doubt, like it reintroduced the tax effort. Okay, that is the parameters which last year we discussed. In that, tax effort is also there, tax and physical effort. That time we have told new parameters have been introduced, the demographic performance and the tax efforts. These two are new parameters which they use to understand which state should get how much. So tax effort, even though we tell new parameter, that is compared to the 14th Finance Commission we are telling. In the 13th and 14th Finance Commission, there was nothing called tax effort. Earlier, I think in the 10th or 11th, okay, this is the information. The 11th Finance Commission, they had something related tax-based criteria they had. 12th Finance Commission also continued using that. But in the 13th and 14th, they dropped it. This is extra information I'm giving you because UPSC will definitely take this point and ask you in the coming years. Okay. So tax effort means your tax revenue, the state's tax revenue divided by the gross state GDP. So that way you can understand which state is using or doing the tax thing better, and they will get more share of the central income, central tax income. So they have reintroduced it now. That is why that statement is, it reintroduced the tax effort criteria, which is a true statement. Don't think it is like not reintroduced. It is the other way. Okay, people have confusion like that. That's why I explained. So now this statement also becomes correct. And the weightage 2.5. This and all, again, the parameter thing. Okay, go and study in my test number 4, economics test number 4. Now RTGS and NEFT. This also in detail concept in test number 4. We have given 2 to 3 pages of notes on each of these. What is RTGS? What is NEFT? Then a comparison table between all this, like whether they are available 24/7, whether there is an extra charges on that. And also without knowing all this also, because we commonly use these things, banking system, we use daily transferring money to each other. We know this concept. Okay. Because RTGS is something like more than 2 lakhs you have to send somewhere, or you have to send outside the country. These and all you use RTGS. Here what they are asking, the RTGS settlement time is instantaneous, that is real time gross system, while in the case of NEFT it is some time to settle, that is in 30 minutes batches they do. That's correct. Okay, statement 1 is correct. Now the second one, RTGS, the customer is charged for inward transaction, meaning you are receiving money and you will be charged. That itself is an absurd statement. Okay, outward still some concept is there, beyond a particular limit and all. If you send some small 25 rupee, 50 rupee will be taken for RTGS, but this inward is completely wrong. Okay, so statement 2 is wrong. And then operating hours for RTGS are restricted on certain days. That also is wrong, because RTGS also like 24/7. This, see, now all are available 24/7. That was the MCQ I made when I think 2018-19 time or something they made this change, and we have updated this. So here you have to know that these are basics and common usage, and UPSC is going to ask it like GST, UPI, these things they are going to ask you again and again. So you have to know the basics. Please go and revise the test number 4 of economics. Answer is A1 only. Now next one, again a concept, alternative investment fund. About all this bond, stock, hedge fund, venture capital, we have separate MCQ, but you don't need all of them. Go to any MCQ which has alternative investment fund, AIF, and there we have explained it's something of the complex nature, something which is like giving you very high return, but it has that much risk also. So that kind of things which usually people with extra fund and all, they do it. Examples are given: venture capital, private equity, hedge fund, managed future. So bond and stock is something which everybody, most of us do, but hedge fund and venture capital, that is only 2 is the answer for this. They are the only ones which are coming under AIF in these options. So this again is a straightforward thing. This is there in our full test number 4, MCQ 88. Please study from a genuine test series, because next year also if you mug up lot of notes and topper notes and this much content, in the exam hall, nothing is going to be helpful. You have to know the factual information and exactly what UPSC will ask you. That is why our limited MCQs are there. We have 50 to 100 tests, in which most of them are current affair. Remaining, if you take the static subjects alone, it will be very less. That many tests if you take, simply learn the concepts in those number of MCQs. Each test will have 100 MCQ. Question explanations like this are given. You will be easily getting the cutoff at least. Okay, because that is what you need. You don't have to do that much of studies for your prelims. Our prelims test series are guaranteed that last many years, more than 40 to 50 questions are answerable, and we have been showing you the proof also. So try to get these and try to study this today itself. Okay. Now next one, about the RBI. The Reserve Bank of India mandates all listed companies to submit something called Business Responsibility and Sustainable Report, BRSR. And in India, a company submitting this is usually done in a non-financial way. Okay, meaning more than financial content, there is non-financial content. So this one again is a January 2024 current affair, in which the SEBI will keep updating its guidelines and framework. There they have issued that every company should do this. So it's not RBI, it is SEBI. So answer is 2 only, because in that they are telling you disclose most of your non-financial performance, that is the ESG parameters. You can tell your environmental, social, governance, that kind of thing, and compare between different sectors, and that kind of report you should be giving. Mandatorily, every company should be given. So this is again a January, see, it's an old current affair, January 2024, July 2023, May 2022, all these times SEBI guidelines, when they do, they have been telling about this ESG report, which is officially called the BRSR. So this can be tough because it's factual and it's old, and same like this, at least 10 to 13 questions if this year prelims, if you take 10 to 13 questions are old current affair, meaning it's like 2021 to 23 range. It is not 2024, it is not 2025. So UPSC does this, but this time 10 to 13 questions came, and it's factual in nature also, and options are this 1 pair, 2 pair type. That is why it can be looking tough, but I'm just telling you that if you study from proper genuine source and 2 years of current affair, if you do, you get kind of questions which will be easily solvable, meaning even if you ignore the other 13 questions, you can still reach the cutoff. Okay, so try to focus on these. Now this one, this if you take common sensically also you can solve, elimination also you can solve. Okay, see this thing, there is no regulatory body, okay, no regulatory body either to warn the small investors about the risk of options trading or to act on unregistered financial advisors in this regard, meaning we have a SEBI for this purpose only. Okay, Security Exchange, SEBI is only for warning or issuing guidelines and all these things. So that 3, if you eliminate itself, you get the answer as 1 and 2. Now try reading 1 and 2. India accounts for a very large portion of all equity options contract traded globally, thus having a boom, meaning our things are booming. Okay, the stock market is booming, our equity things are booming, that we know. That is the thing which you would have noticed in the news. And then India's stock market has grown rapidly in recent past, overtaking Hong Kong. Okay, Hong Kong is one of the strongest ones. So rank wise, if you take, it is 4th and India is 5th. Okay, after USA, China, Japan. So 2024-25, every month if you take our test PDF, every month you take the editorial notes or videos, everywhere we have told that the stock market is booming. And with Hong Kong, that competition is there, meaning when we are like 4 point something trillion, they'll be 4 point something, meaning very minute differences, but we were at one point reaching kind of Hong Kong's number. Okay, so that keeps going up and down. So that way, these two things are there in almost every test. You take any current affair PDF and simply type the word Hong Kong, you will get these things. Okay, these things mentioned in different format. It will not be exactly this line, but that is the gist of that. So this is about the stock market question. Now this one is the UPI question which I told. This again is very old current affair because it's very hard for students to remember like which all countries adopted, because whenever a president or prime minister comes to India from any other country, Modi will take him to that particular one small shop or something and make them purchase something and immediately show the UPI scanning, and that videos you would have seen. So many countries we have seen like that, but which all came and which all actually accepted and started implementing in their country, you may not know. But again, if you take the month wise, UAE in April 2022 did it, France in February 2024, Singapore in February 2023. And that particular month's PDF, if you go and open Vysh IAS PDF, you will find that exact thing. See, UAE applied or implemented UPI. Then Singapore implemented UPI and Pay Now. And here, France in the Eiffel Tower in Paris, they implemented in 2024. So this are all at least 2024 PDF you will have. The old ones you won't have maybe. So these kind of things and all you cannot prepare and go. It is about the observation of students. It's about, that's what they're checking, whether you are aware of things happening, whether you are seeing when somebody is visiting our country, whether Modi is promoting any of our product to other nations. So these kind of things is little tough to remember, because, and this is not constant also. You cannot by heart it, because next year by that time maybe few more countries will adopt it. So you cannot have a fixed answer. So it's about observation and be ready for such questions. Okay. Now about again a misleading question, which maybe the answer key will vary among coaching classes. Most of the people are telling answers 1, 2 and 5, and the question here is about the income sources of Reserve Bank of India, meaning how all they make money. So you know that they operation twist and all we have taught you that you will sell the bond or you will get back the bond. So buying and selling of the bond, buying and selling of the foreign currency. Anyway, you are doing something for getting a middle margin, and that's how you make the profit. So that is obviously there. But pension fund management or lending to private company and all, this is not done by RBI. For that, other banks are there. RBI is not in charge of doing these kind of things. So that is common sensically itself. You know that 1 and 2 is there and 3 and 4 is not there. This much you will know. But the 5th one is little tricky. Printing and distributing currency note. So you know that RBI's job is that. And obviously when RBI is printing, like suppose a 100 rupee note they are printing, they will not have a 100 rupee expense. It will be less, the ink charge and all these things, it will be lesser. And so there is a profit. But UPSC did not ask you like what are the things which RBI makes profit. They are asking what is the income source. So RBI is not printing currency to make income. In that case means RBI will keep on printing notes and then finally a lot of income will come. It's not an income source. It is an activity it is doing. And even in the ledger of RBI official government site, if you go and see like what are their income sources and what are their expenses, this thing comes in the expenses part. It's not in the income part. Okay, these are little technical, but again I'm telling, because of that we are marking the answer D, that is 1, 2 and 5. That 5 also gives you an income. But these examiners, they purposely to trouble you, they put in the other way, like how I told that printing and distribution is not an income source, it is an expense, it is not going to be done every time, so it's not a source of income. That way they can justify it. They won't justify, they just give their answer key what they want, but you have to wait 1 year. So that is why D or A. Okay, I'm telling the answer D, but still it can be A also if that examiner has thought this way by taking from the government site. Okay, so remaining you can read it here. I'll pause and read it. I have given enough details for next year also in case this topic repeats. Okay. Now again a similar question which in a particular PDF we cannot show you because these are general things, very very general. Even in the NCRTs it's there that agriculture income is not taxed, meaning the central government income tax you don't have to do. That you would have seen many celebrities and all buying agricultural land and they do farming because there is no income tax. But the states and the local level and all, there are certain kind of minute tax related to that land area and things and all. So that way agriculture allied activity, when you do the poultry farming, the wool rearing and all, it is not the agriculture as such which is being to be taxed. There are some other things also. Okay, it's like an agriculture income is there from that and a non-agriculture income is there from that. They did not ask you actually agriculture income. They told you in agriculture activities, is it like exempted of any tax? Meaning it's a very open statement, but there is actually some tax to it. From the states also it can be, and from the union itself for the non-agricultural income it can be there. So it is not exempt, and the first statement is wrong. And when the first statement is wrong, there is only one option which you have. Statement 1 is not correct and statement 2 is correct. Okay, because all the other 3 statements, if you see, it is telling like statement 1 is correct, but here statement 1 is wrong. Second statement, if you see, rural agricultural land is not considered a capital asset under the provisions of income tax. As I told you already, the rural agricultural land will not be considered under the Income Tax Act in the Central Act. It will not be there. Okay, but if it's an urban land, urban land, it will be considered based on the population. That also I have given here. You can use for the future exams. Okay, that is why I'm just putting the data here. So again, these are a little tricky. In the exam hall, it's not easy for everyone to correctly mark it, but that common sense, if you applied, that any tax, that extreme thing, if you have eliminated directly the answer, only one answer is possible. Okay, that elimination was possible here. Now this I think is the last question. So this is about again bondholder and stock. Okay, we know that stock market is very like up and down, it keeps going, but the bond are more reliable because every month or every term you will keep getting fixed interest, and whenever a company crashes and all, the bond people will be given priority. This is actually common sense, and you would know if you are owning any bond or stock. But else also in our test PDF and all, it's there that whenever the bank fails, the bondholder rank is higher in pecking order than the shareholder, and this only in 3 statements they have put to complicate it. Okay, first statement is, as regards returns from an investment in a company, generally bondholders are considered to be relatively at lower risk. Okay, so that is fixed. Now they are telling bondholders are lenders to the company, where stockholders are the owner, because share when you buy, you are actually becoming an owner of that. Okay, Reliance or this thing, you are becoming 1%, 2%, you are becoming an owner of that. But bond is something like it's a debt instrument. That also basic about bond, debt instrument. So you are actually lending money and getting the bond, and then they are paying you interest, and later you will give away the bond. So it's a kind of a debt concept. So that's actually true. Now, for repayment purpose, bondholders are prioritized over stockholders. This is again the same thing which I told you in our test. So 2 and 3 both are correct. So here both statement 2 and 3 are correct, and both of them explain statement 1. That is, statement 1 is what? Bondholders are at more safer side. So this is the 2 and 3 are the reasons. 1 is true. So this is actually true, and the answer is A. Okay. Now bonds concept in future, if you have to study, these are the things which Vysh IAS test has covered. You also, from whichever source you are studying, make sure that they are teaching you the basic of bonds and difference with the stocks. This green bond, masala bond, dim sum bond, samurai bond, sovereign, PSU bond, government taxable savings bond, government's fully serviced bonds is there, 81 and 82 bonds are there, treasury bond, index inflation bond, capital index, the floating rate bond, then the foreign currency, which last year they asked, foreign currency convertible bond, the plain vanilla bond, bond ETFs are there, exchange traded fund, municipal bond, bond, then Bharat bond is there, an ETF only, then sovereign gold bond scheme, which is now kind of discontinued, electoral bond also discontinued, surety bonds, climate bond initiative. These many things in our test alone is there. Like this, if you study from a genuine source, make sure these things are studied, because most of this, at least half of them, are already asked in UPSC in one form or the other. The detailed concept they are asking. So please see to it that you are studying nicely. In case you want Vysh IAS PDF, we have put an economics separate package also, which will have all these concepts in 5 separate tests, 500 MCQ with detailed solutions. Then the 2 years of budget, that is one which got over now and one which is going to come, because that is what the 2026 aspirants need it. So that one, 2 years of economics survey, the summary PDF, then the economics related some revision charts. I showed you World Bank chart and different banking and all. We have 25 plus such charts that also will be included into a single package. This is a soft copy in your phone you can save, in your email you can save, and you can keep revising it throughout the year, that by the time of exam it will be by heart for you and you will be able to clear the prelims easily. So this year, if you see, 10 out of 13 questions are solvable from this test series alone. So try to get this in future, whichever competitive exam you are giving, any concept, any deficit, any revenue, expenditure, everything you will be able to solve it. Okay, even GDP, everything is there. This time questions did not come on GDP, but that also formulas, everything is there. So try to enroll to this. Whichever subject you want, we have available. Okay, polity also I told you, 13 out of 14 questions came from these PDF only, which I am showing you these PDFs. History, 25 solved test PDF are there, and this time 17, actually 16 came. One is world history kind of thing. 16 questions were there and 12 were solvable. Last year 9 questions were there, 6 were solvable just from our PDF. So if you enroll to these separate PDFs, including revision charts also, we have a package. If you do this, you will be clearing prelims easily. Okay, so try to come and ask for this thing, and also tell us which subject I should do. Okay, economics is done, history is done, polity is done. Mostly I will do current affairs and environment and geography the next. So try to tell me. And about the full year package, that also is going to be launched this week. I'm just trying to finish off the analysis so that you don't have any doubt on a single question which came on 2025 prelims. Okay, so economics is done. Tell me which subject you want in comment section.